running your business without understanding your numbers is like trying to navigate the Sahara Desert without a compass. What I mean by that is you're gonna run out of money, your business is gonna suffer, it's gonna blister under the sun, it's gonna get beat up, and you're eventually gonna end up closing your doors. In this video, I'm gonna teach you how to navigate your profit and loss statement. Stick with me until the end, understand your numbers. It's one of the best things you can do to ensure your success in business. Okay, so when we're looking at a profit and loss statement, we prefer to use QuickBooks. QuickBooks is our accounting software for both my locations that I corporately own as well as our franchise owners. And bear in mind, when I'm going through a profit and loss statement, I'm probably going to be focused more on service-based businesses because that's what I operate. But this stuff is going to be relevant regardless if you're a service business in retail, it really doesn't matter. So I'm just going to show you some basics here with QuickBooks on how you should filter these down. We ask that our franchise owners look at their profit and loss statement at least a few times a week to get a feel for where they are revenue-wise. They can also use our other software, our other operating system to keep an eye on numbers. But at the very least, you should essentially be going through and auditing every single month after the month closes out. So we like to look at these on a monthly basis, then a quarterly basis, and then again, all the way at the end of the year. Sometimes it's a good idea to do a semi-annual review as well. But in QuickBooks, they make this very, very simple. All of your information should be syncing over from any kind of other systems that you're using for processing jobs or anything along those lines. It'll process over and pull the information into your accounting software. So your bank account should be connected. Everything should be connected into your accounting system. For this example, we're just going to break it down to the current month. I'm filming this in December, so we're just going to stick with December for right now. I want to explain the difference between the accounting methods. You have a cash-based and an accrual-based. This is the way that you're filing your accounting. Most businesses are going to file on a cash basis, but when you're looking at a profit and loss statement, sometimes it makes sense to look at an accrual, and I'll briefly explain the difference between the two. So a cash-based accounting system is on actual monies received. So it's an example of this would be you invoiced a client. When they pay that invoice, that's when it's going to realize that revenue on your profit and loss statement. On an accrual basis, when you invoice the client, regardless if they've paid or not, it's going to realize that income on this statement. So it's really important to keep an eye on both of these when you're doing any kind of billing terms. So in our industry, for example, we bill on 30-day net terms. And so our profit and loss statement can look wildly different between a cash-based and accrual-based, depending on how many invoices somebody's paid within a specific period of time. But it's a good idea to look at the accrual basis to get a feel for how your sales are doing, regardless of how your cash flow is doing, and vice versa. It's a good idea to look at the cash flow to have a full understanding of how your actual cash coming in is looking on your profit and loss statement. We'll explain how to look at this shortly as we get into this. There is one other selection that I always like to have on when I'm looking at a profit and loss statement, and that's going to be the percentage of income option. What this is going to do is every line item listed on your profit and loss statement is going to compare itself as a percentage basis to the total income that your business has brought in. So this is a very good metric to measure what percentage your costs are of your total sales, things like that. Those are really critical figures and numbers to know by heart in your business to ensure that you're doing the right thing here. We're going to hop out from this and we are going to hop into an actual P&L statement. All right, so I essentially exported that report, and for our purposes, I went through and took all line items and I put a single dollar in so that I'm not displaying actual revenue figures for my company. So, but this is an idea of how complex some of these profit and loss statements can get. And that's important to understand because if you go to business school, they're essentially just going to give you the basics, right? And they're gonna glob all this together. It's realistic to understand that it's a good idea in your business to have every single revenue stream in your business broken down so that you understand where your money is coming from. So the top half of a income statement or a profit and loss statement is going to be your income. So this is money into the company. This is your revenue for the company. Again, we have multiple categories in my specific business, and we like to glob these into specific categories so that we can see how well floor care is doing, how well janitorial is doing. And so we have a really clear picture of how each individual department or profit center within our business is doing as far as generating its revenue. Then it tallies all of this up into those subcategories, and down at the bottom, you end up with your total income. Now, obviously, you see how the percentage, because it's comparing to this amount. In this example, we have $29 in income. This business is not doing very well. But the income amount is then, this is the total revenue into your business. So everything's going to start here. This comes in, and now we're going to start deducting things. And then you have what I consider top line on your profit and loss, and that's going to be your COGS. COGS can be referred to a number of different ways. It can be cost of goods sold. It could be it could even be separated into subs like this. So cost of labor, people organize this in a lot of different ways, but regardless, this is your direct cost to deliver your service, or in, like, say, retail, your product. This is direct labor cost, direct material cost, anything that you have to out of pocket in order to deliver your service or your widget in your business. And this is just some examples of those, but in our case, it's mostly just labor driven. And so we have our direct costs. We have a split model between employees and subcontractors, and they have their individual costs, and there are some material costs, but very minimal in my type of business because we're a service-based business. So then you're going to take that out, and that's going to give you your gross profit on here. Now, this is where things really get critical. This is one of the most important numbers that you can monitor in your business. In this case, it's showing 82%. That's a fantasy for most businesses normally, unless you're in, say, maybe online courses or something. This would be very, very unrealistic. But a good rule of thumb in the service industry is to try and keep this number at least at 50% or higher. So your gross profit is what you have after you deliver the service. And it's very, very important that you monitor this number. This is the main reason that you're going to be looking at your profit and loss statement on a consistent basis, is to make sure that you're not losing money on the delivery of the service. This is also a figure you're going to use for establishing compensation rates, negotiating with vendors, all sorts of aspects, right? So after that, this is where things are a little bit more controllable on your general overhead. So after that, you have your other expenses, right? So this includes, again, everything from your rent, executive salaries, management salaries. I like to keep below the line, because the management and the oversight is something that you really can't fluctuate. Most of the time, they're salaried individuals. So we also have payroll and wages down here too. Call center individuals in my office are down here. They're below that. They're not a direct cost for me. Now, some business owners might argue that, and they might put it above the fold, but I prefer to have it down here. You have repairs and maintenance. It goes on and on and on. Your vehicle expenses, repairs, so on and so forth. And then we get down to the most important number and the reason we're in business overall, right? Which is your profit. So this is what you're actually breaking down at the end of the day. This is what you're taking home. This is what's left over after everything's been paid. And this is what you as the owner get to earn in the business. Again, this is an unrealistic example in here because this is fake math. But in a service-based business, if you're running, it depends on your growth of stage, but if you're running anywhere from 15 to about 25%, you're generally doing pretty well. That's on a cash basis. Again, if you're doing this on an accrual basis and you're running your books on an accrual-based accounting method, or you're checking your revenue that way. These can wildly shift while you're waiting for clients to collect. You might end up running into a negative number. And that's very important to watch because that means that you're floating the operation of your business. It can be a dangerous situation if you don't manage that properly. So always ensure that this is a positive number is the way to go. If you're in a high growth strategy too, your profitability might be a little, might be on the lower end. This is an odd example, but like Uber, for example, loses like 21% or something every single year. And I don't think they've ever turned a profit. I could be wrong on that, but that's a different growth strategy. That's a more sophisticated business model where they're taking on investment and they're establishing themselves so that the profitability comes later. Unless you have major PE backers or you are Uber, that's probably not going to be a feasible strategy for anybody that's watching my video on P&Ls. So you want to make sure that you always have a positive profit number down here. Again, it's net income, but it's pretty much, that's not profit. It's just another term for it. So this section of the business though, is where you can really hone in and find where you might be leaking money and losing money in the business. Pay attention to these percentages. That's why I like to have an income percentage comparison. Every line item, you should have essentially a budgeted percentage going towards that. For example, when you're looking at marketing, right? And you have this glob together and you have a total marketing percentage. Depending on the type of business you're in, you should have a standard percentage that this is sitting at. If it goes too high or it goes too low, that's where you're going to make a decision to invest additional in marketing or to decrease your marketing spend or find out why you're wasting money in the marketing area. My business has minimal marketing expenses, but it does have additional payroll expenses when it comes to our sales representatives. So we're more of a sales focused organization. But if you're going and you're servicing the general public and you're going into, say, lawn care and you're maintaining residential homes, your marketing percentage is going to be much higher than what we generally spend in my business. So a healthy marketing spend initially starting out for a business like that might look like 15%, whereas in my business, it might look closer to 5%. So that's an example. This is how, when they talk about budgeting, this is what they mean when you're setting budgets. You're setting budgets based on the total income that your business is generating or expected to generate. And then you're turning that into what percentage of that can I allocate towards each individual aspect of my business? What percentage is allocated to my general management oversight, for example? What percentage is allocated to, again, marketing? What percentage is going to be allocated to your office team? This is one of the most important things you can do in your business is understand these numbers and live by your profit and loss statement. This should be second nature to every single business owner out there. If you're still with us at this point, I appreciate you sticking in there. Thanks for joining us on another episode of Adam's Corner on the Distilled Wisdom Podcast. My chat with you, one-on-one.
I'm Refreshman, and I'm here to empower you to take charge of your destiny. Are you tired of working for someone else? Do you dream of making a difference in your community and unleashing your full potential? Then look no further than Refresh Franchising. With us by your side, you can start your own heroic business venture with the unwavering support and cutting-edge resources you need to conquer your goals. Our franchise model is like a super serum that will give you the strength to succeed. Refresh provides extensive training, ongoing mentorship, and an established brand with a loyal customer base. Plus, you'll become part of a heroic league of entrepreneurs who serve as allies on your journey towards greatness. And the best part, you won't have to waste time building your business from scratch like some kind of neophyte. With Refresh Franchising, you'll hit the ground running at lightning speed and unlock the key to heroic financial success. So gather your courage, summon your inner superhero, and visit refreshfranchising.com to launch your heroic franchise journey. Always remember, together, we can achieve greatness.